Hi friends, welcome back again. In financial year 2021, almost every stock gave positive returns and many of them became multi-baggers, returning more than 100% in a single year. That's because the general market is in a strong bull phase, but very few of them gave excellent entry points, brilliant chart formation backed by strong fundamentals. Today, we are going to talk about such a stock that is from a high growth sector with excellent fundamentals, and currently the stock is at the initial stage of a strong upward rally. The stock that we are going to discuss is RPG Life Sciences. So let's start from the business of the company. RPG Life Sciences is a pharma sector stock, and currently the pharma sector is experiencing a phenomenal growth. The company belongs to RPG Group, which is also the holding company of CAGR Limited, the popular tire company. From 2001, RPG Life Sciences completely focused on pharmaceuticals, fermentation, and biotechnology. It is engaged in research, development, manufacturing, and marketing of pharmaceutical formulations and APIs. To know more about APIs, you can watch this video on Organics IPO, where I have explained API in the most simplified way. You can find the link in the description. If I explain briefly, API is the main working particle, and formulation is the multi-step process of making the final drug or medicine using these APIs and other components. And formulation segment alone accounts for about 83% of company's revenue, and other 17% is from APIs. Recently, they have launched 7 new products. The company has a worldwide presence with 66% of total revenue is from India and rest from export sales, having presence across 50 plus countries. Now let's take a look at company's financials. You can see the market cap is around 1000 crores. That means it's a small cap company. And that's why there's a small disclaimer. The small caps are a bit riskier as they always exposed to manipulation and thus experience high volatility. So maintain proper risk management before investing. Coming back, the stock is currently trading at 612 rupees and stock PE is at 22.7, which is lower than the industry PE of 28.1. Excellent ROCE and ROE of 27.2% and 20.4% respectively. Almost zero debt company with debt to equity ratio of just 0.1 and debt to profit at 0.05 and a good promoter holding of 72%. Now we will see the profit and sales growth and what they are indicating. Are they going to lead to a huge upside move? You can see that the sales growth is low at 5-year CAGR of 6.86%. And in recent year, it's lower at 3.61%, but the profit growth is huge at 5-year CAGR of excellent 28%, and in recent year, it's better at around 38%, showing that the company is in business of high profit margin products. You can see that ROCE and ROE have also increased in recent years. Take a look at this yearly profit and loss chart. You can see that in financial year 18-19, EPS was 6.54 and it became 17.54 in 19-20, a growth of about 168%, and 24.19 in financial year 2021, a growth of about 38%. Also, they have increased their profit margin from just 10% in 2019 to 18% in 2021. Now if we see the quarterly results, the picture is same. QoQ EPS growth of September quarter was 14%. For December quarter, it went from 4.78 to 7.78, a growth of 63%. For March quarter, it's 132%. And for recent quarter, that is June quarter, it went from 5.48 to 8.21, a growth of around 50%. And this same type of phenomenal growth happened from 2018 quarter to 2019 quarters and 2019 quarter to 2020 quarter. But what's special about the stock's current situation? That you can understand by looking at the chart of this stock. You can see the stock is currently at an all-time high of 612 rupees as on 3rd September 2021, Friday. Not only that, the stock has formed a beautiful cup pattern, and the cup has not formed in weeks or months, but it has formed in 3.5 years. And remember, longer the period of the cup, stronger the breakout move can happen. Also, you can see that on January 2018, the stock tried to break the 600 rupees resistance but failed to do so, and the stock corrected heavily. And now you can see it finally broke that resistance with a strong weekly engulfing candle. You can see that the breakout happened with huge volume. That's a good sign. On daily candle chart, it gave 2 days strong volume moves. The fundamentals and technicals is in line and showing that the stock is on the verge of strong upside move. So this stock has offered an excellent opportunity, an opportunity very rarely found. But whatever type of trader you are, breakout trader or retest type trader, if you decide to invest 10% of your capital in this stock, you should put a percentage of that at breakout, as you can miss the move if the stock just flies away, and rest amount at retest or other entry points. And lastly, never place your trade without placing stop loss, as whatever may be the fundamentals or technicals, you never know what the market is going to do next. It can prove you wrong. In this case, the stop loss can be placed at rupees 450 below the previous week's week, and much safer stop loss can be placed at 400 to 420 below the previous lower low. That's all about this stock. Comment down below what's your opinion, and if you know any other stock that is showing the same scenario. If you really like the in-depth analysis of this stock, hit the like button and subscribe our channel for such stock analysis and business lessons. I am Devojyoti Biswas and you are watching FinTech Funda, and our aim is to help you achieve financial freedom through fundamental and technical knowledge. Thank you.